Okay. Thank you once again for joining in this section. Um, uh, I will grant you opportunity to ask question when this is over. All right. I actually deliberately and intentionally am doing this just for people to get what I'm actually doing on the channel, and this is actually for people that cannot afford the information that I'm actually providing in the mentorship. And you should know that every information that I've actually given, right, that all webinars that I've held, all the concept that I've taught, all those things were not just taught uh, in an halfway. No, they were not taught in an halfway. They were taught so that when you listen to them, you will be able to be profit. I mean, to be able to be profitable with those terms and actually those concepts that I taught. But um, I discovered that uh, that a whole lot of people just want to be spoon fed, even though when I've already given out those information, they don't actually want to study that. And one of my plan is that okay, on my webinars, we actually get into the YouTube channel. You guys and I'm actually going to arrange it for people that actually want to learn about BTMM. I'm going to group them in the session so that you can actually, if you go through those sessions on BTMM, you'll be able to understand them. Then, if it's actually the LPC pattern that you actually want to go through, or probably ICT, I will probably teach on some. I don't really know much of ICT terms because I don't really study ICT, right? So I will make sure that I actually group them together so that people that are interested in using indicators can actually use indicator, and people that are actually interested in not using indicator can actually trade without using indicator. Probably I will find time to actually do that so that anybody that just asks for, okay, what is it going to do, that is the material you're going to get. You study them accordingly, then you will be better. All right, today, just for some goodness sake, I will like to share basics of what I actually teach in the mentorship, the basic of what I offered in the mentorship. So you will learn about the LPC pattern. The LPC simply means the liquidity provider concept, right? It means the liquidity provider concept. So you'll be able to learn the pattern to actually look out for. Then, if you can join this knowledge with what I taught on market structure, so you just do well. That's actually one thing I'm actually going to do, right? So because all those information were actually linked together in the mentorship to actually make a whole for you to actually see them. But if you can actually find your way around it, you link the information with the market structure with what I'm about to teach today. I believe that when I send my setup out, it will not look strange. You will understand, and also you will be able to make setup all by yourself, right? You'll be able to make setup all by yourself, and with this, you'll be able to be good, right? And actually make profit with this alone, right? So that's actually the intention. Because if I say that I'm actually offering free materials, this is not only for you guys to just know that, oh, yeah, all the materials are just, yeah, I'm just recording, because the webinars actually take much time. I mean, they actually take effort and actually my time, my resources for me to actually put them together. So you actually do well to study them and actually be effective in doing that, right? So today I will be discussing the LPC, the basic of the LPC. I'll actually give you the pattern. Right, I have three patterns, right? I have three patterns of the LPC setup. Then I will be given two out of the three patterns here. So, and you can apply this to any instrument. I mean, any instrument, be it FX, be it indices, be it in the stock market, um, in volatility market, and any market you actually so desire to trade. You can use this pattern and actually practice with it. And actually, with guys that are actually from Indian that are not allowed to trade any other pairs apart from indices, then crude oil and gold. I think is it gold? I'm not pretty sure, but you'll be able to follow this pattern and actually trade this pattern with whatsoever things your nation actually allowed you to trade. All right. So the LPC pattern is actually very simple. Probably you guys might actually have seen that before. Then we're actually going to draw it. Then we will look at it on we'll look at it together on the chart. Okay, how does the LPC pattern actually looks like? Okay, when we say the LPC pattern, we actually taught you about the market structure, right? The market structure. Then also I have a recordings on liquidity and trap zones, so you can do well to study those liquidity and trap zones. So the major things we're actually looking for is we are looking for liquidity to be taken. Then we are looking for our IP zones. IP simply means these we interest points, right? It means interest point. That shows the point of interest they're actually looking at for you to take your trade, right? This is actually your IP zone, right? Then we're actually looking into the breaking market structure order flow for you to trade. But basically, what the pattern actually looks like is like this. The pattern,
I am not saying it. Anybody that
the pattern, where is that noise coming from? Uh, the pattern, okay, let me find it to uh, excuse me, let me just get it to all right, let me clean this off. Right, you have something like this when we have a swing high, right, then we have a swing low, right? So this is actually your higher high. Don't forget your the market structure, your higher high, this is your higher low. Then we have the market coming back to take out this high, right, this swing high. So after that, we have uh, breaking market structure. So this is actually the basic of the LPC setup, right? We have breaking market structure, right? The market coming back to break this area. So after the market coming back to break this area, then you are looking at the market coming back to the IP zone. Then you are looking at selling it at that particular zone. So this is actually the first pattern I'm actually going to show to you. It actually have variances that we actually look at. So the most important thing is liquidity, right? You are looking for liquidity to be taken. This is actually what I called liquidity grab, right? When you actually have liquidity grab, right? You would have actually seen that before on my chart. Let me just show you that. For people asking for recordings, I might not release the recordings again. They should endeavor to. Sorry. Let me share the chart just for you to see that on my flashcard, I've actually produced something like that. So that's actually what I want to show you. Can you see something like this? So I'll be giving you the basic concept and basic rules around that area, right? So basic things is actually what I drew. You can see it's actually a high. Then we have another higher high, right? Then market took out liquidity here. Then we have breaking market structure. So what are we expecting? We are expecting markets to actually trade back into the IP zone. This is actually the IP zone. You can see that this particular candle took out this high again. So this particular candle here will be our IP zone, right? Then also break this candle, which is actually the market structure. So after breaking this candle, we have a retest of this, then they drop, right? Can you see? These actually are the rules that you're actually going to talk to you about, right? Where I have some concept where I talk about a strong OB, an affected OB, or a weak OB. All those things I might not actually make mention of that. For you to know an OB that actually have the highest probability of holding, you have another OB that you call an infected OB. That's an OB that's been tested before, then an OB that's actually weak. That shows that OB is actually very weak to be rejected from. I'm not going to discuss that, so you should not ask question based on that. I'm not going to discuss that here. Right. So that is actually the pattern. We're still going to see that in the chart. So we're expecting market to come back to this zone. Right. So this particular zone here, right? This particular zone, you call this. Let me use red stuff. You call this zone your source now. So this will now become your source. That your IP zone will become your source. Then this particular zone will become your breaker. You would have actually seen red and yellow on my chart. So this will actually become your breaker. So you're expecting price to retest this area and drop. Right. You're expecting price to retest this area and drop. So this is actually the first part that you're actually looking out for the sell pattern. Then you have another one. There might actually be some cases whereby price might not get to the source, right? When we have something like this. Um, when you have something like this, the high, then the low, right? Then we have higher high, taking out liquidity. Then we have breaking market structure. So market, this will now become um, your source, right? This will become your source, and this will become your breaker, right? Right, your breaker or your BMS, whatever name you actually want to call it. Then you look for market coming back, right? Market can actually come back to retest the breaker instead of the high P zone, right? That shows the high P zone is actually the candle that took out the liquidity, right? So, and I say there are actually three characteristics of this. It can actually be an infected one, it can be and a weak, or it can actually be a strong OB, right? So there are actually some features that you actually see in those things. But I trade most times a strong OB. That's just a OB that will likely and most likely high probability to hold. Weak OB most times doesn't hold. So if you see this OB, just like what I said, I might not actually discuss that in this section. Right. So you look for it retesting this particular zone, then you look for it to drop. So this is actually the pattern you are looking at for the market retesting the source, or the market retesting the um, um, the breaker, right? That's actually the first pattern, right? So we have another one, right? You have another one that I call a mitigation, right? The mitigation kind of setup when you have something like this. Uh, Many of you have actually heard about Quasimodo, right? Quasimodo, that this actually very looks similar to Quasimodo, right? Quasimodo, but it's not Quasimodo. It's actually very different from Quasimodo. Some people actually ask me that is it Quasimodo? I know Quasimodo very well, but this is actually not Quasimodo, but looks very similar to Quasimodo, right? So we have something like this also, but this one is actually not so good, right? I don't like trading this, but the major advantage of this is actually that it's showing you change the market structure, right? It's actually showing you a change or a shift in market structure. Why is it showing you that? You know, this particular area actually shows higher high, this shows higher low. There's this came back to actually take out liquidity. Now you should take note that when this particular higher high is actually too far, you can't take that as liquidity grab again, right? You can't take that as stop run or whatever run you're actually looking out for. Probably, for example, it just actually went higher than this, and you actually considering this as liquidity. It's no longer liquidity, because based on the concept of liquidity, you can actually get my recordings on liquidity and listen to how I explain the concept of liquidity providers, right? Induce, trap, and shift, right? In this particular area, right? Because we have people selling in this market already, right? A whole lot of people are actually selling here. I'm using this as an example for you to know. I explained this very well in the mentorship class. A lot of people they're already selling in this place, right? And when they are selling, where would they put their stop loss? They will actually put their stop loss here, right? Their stop loss will be here, and a whole lot of people have actually seen this actually as a high. So they will be expecting this market to break, right? To break up and actually hit their buy stop. And mind you, when you are selling, just like what I explained in the market structure, we have two participants in the market. Some participants are actually the buyers and some are the sellers. So when market is buying, that shows we have more people that are actually buying and actually have some other people that are actually selling to them. Right. So in this particular scenario, the market is actually selling in this particular place. That shows the sellers will have actually put their stop loss here. And mind you, when you are selling, right, when you're actually selling a particular pair, your stop loss is is actually seen as a buy stop. Right. Your stop loss is seen as a buy stop. Right. So when you are selling, your stop loss, you're going to put your stop loss above the high, then that particular zone is seen as a buy stop. So this actually makes this zone liquidity zones. What does liquidity zone mean? Liquidity zone simply means zones that actually have a whole lot of money sitting down there. Right, a whole lot of money. Why do we consider that as liquidity zone? Number one, we have people selling that put their buy stop there. Then we have prospective buyers that actually want to buy that market. Their buy stop is also sitting around this area, right? Their buy stop is also sitting around this area. That shows we have a whole lot of money sitting down here. So what do you think liquidity providers will actually do? Now, they don't buy, right? They don't actually, if they want to sell the market, they won't sell the market at a very cheap price. That is actually what you should know. They will not sell the market at the very cheap price. They are looking for the most expensive price, right? The most expensive price to sell the market to, right? So if they want to buy, they buy very cheap, and if they want to sell, they sell very high. You should know that from today. So this buy stop will now form because we have a whole lot of people that actually want to buy here, and mind you, they want to sell. So we have traders that want to buy, but liquidity providers actually want to sell. That shows those people that want to buy will be buying from who? From the liquidity provider, and the liquidity providers will sell to who? They will sell to those people that are sitting down in this particular area. So that's more of the reason why they will come to this area and actually activate their order. Which order that shows their buy stop and the stop loss of the sellers would be activated, which actually shows they want to buy. You know they want to sell, so they will now sell. Their selling here will now shift the market down. Are you following? So that's more of the reason why your M's and W most time doesn't work. Because when you have W, for example, when you have W, right, you have something like this. We have W. That shows liquidity is actually sitting down around this area. How do I know that? Right. We have people that have already seen this. BTMM traders have already seen this. They want to buy. A lot of people are buying it. A lot of people are buying it. But liquidity providers can actually not buy in this particular area because this is actually too expensive for them to buy. They'll be looking for a cheaper price to actually buy that market. And a whole lot of people have actually buying this market. And a lot of traders would have actually put their sell stop here, that if this zone is broken, they want their sell stop to be activated and they enjoy the trend. Right. And a whole lot of people buying would have actually put their stop loss here. Just like what I said, when you are buying now, your stop loss is now seen as a sell stop. Right. As a place whereby you're actually looking to sell. Right. That shows you actually bought that very expensive. Let's say you actually bought it here and you actually want to sell it back here. Your stop loss simply means that you are selling your position back. That shows when you are buying, if you put your stop loss right below your low, just like this double bottom here, that shows you are actually looking to sell off your position because you already bought that position, but the trade is actually not in your favor. Then you say that, okay, when this market comes to this area, this is actually your point of validation. You want market to actually close your order or to sell your order back. That shows you are willing to sell this market at a very cheaper price here. You bought it high and you're actually selling it cheap. And that's actually the concept of liquidity. The market maker, they will be looking for who to buy from at a very cheap price. But here you are. You've already put your sell stop here, which is actually your stop loss of buying. So they will come to this area, activate your sell stop, and some other retail traders that have already put their sell stop in this area. What would they do? They will buy the market from you. You will sell the market to them, then they will go up. That shows they bought it at a very cheaper price and they're actually going up. So that is why you will see that your trade most times when you're trading M's and W doesn't work out. So when you see this kind of pattern, you should actually know what is actually happening in there. Right. So this works basically. We have different zones that you can actually watch out for this particular pattern. Right. We have different zones. Okay. Just like what I'm still going to mention those zones and just draw the pattern for you to see that. Now, this is another one that you can actually call shift market structure. Just like what I said, this is actually higher high, right? This is higher high, right? This is higher high. This is higher low, right? And this is another higher high, which actually shows a trend. This is another higher high. Then the market fails to create another higher low, but the market created a lower low. Right. So like this, you should know that there is a shift in market structure also. There is a shift in market structure. And by this, you are waiting for opportunity to sell this market. So this can be the market will come back to retest this particular breaker or this particular IP zone. And this is actually another pattern that you can actually look out for, which is actually like a mitigation kind of, right? So the market created an higher high, the market created an higher low, but the market failed to create another higher high. The market created an higher low. Can you see this? So the market came back down to create another lower low. So with this, you should know that, okay, the market is now creating a series of what? A series of of downward characteristics. That's actually lower high, lower low, right? You've seen a lower low, lower high in here, right? Lower high, then you've actually seen your lower low. So with this, you are expecting the market to retest either the breaker again or the IP zone here. That's actually the other block, the last bearish order block in that area. Either the breaker and drop, or either the source, all right, market retesting the source and drop. So that is actually what you'll be looking out for. So this is actually what we call the LPC pattern and liquidity providers, because basically you must actually see the liquidity taken out. And your liquidity should not actually be what when the market is actually creating a series of higher high or higher low, or as the case may be. So what are the zones you're actually looking out for? These zones, after identifying that pattern, this zone you are looking out for, right? Let me write the zones you are looking out for there. You are looking for, right? Equal high, right? Equal high or low. Very, very important, which actually what some people call double top or double bottom, right? Double top or double bottom. Then you are looking for a swing high, high or low, right? A swing high or low, right? You are actually looking for a swing high. Actually means when the market is creating a series of higher highs, higher low. So you are looking for that higher high to be taken, or you are looking for that lower low to be taken, right? For you to actually buy the market up. Then you're also looking for a weekly. Let me start from yearly high or low. Very, very important also. So you can actually look and study the recordings I did on weekly AMD and daily AMD. I mean daily range and weekly range. This will also help your knowledge in actually bringing everything together. So we have monthly, right? Monthly high or low. I will use HL high or low. We have weekly, all right, high or low. Then we have daily high or low. So these are important trap zones that you actually see, right? That you can actually work with, that you can actually see this pattern appearing on, and for you to actually take the trade, right? So these are important trap zones that you look for the trade. I mean, this pattern to actually play out for you to take that your trade. Now, before we actually go into the chart, there's some other things that you should look out for. So you can trade this in line with the order flow, right? Then you can actually trade this on all time frame as low as 1 minute time frame. So when you see this pattern on 1 minute time frame, you can enter the market. I will also show you some ethnic techniques that you can actually use, but not as detailed as what I would have actually done in the mentorship class. We have different entry styles, right? We have different entry styles that you can actually use, but I will just give you just one of it. Then you can as well practice this probably over the weekend. Then you mark chart, set up, you mark flashcard to actually present this. Then I can permit, right? I can permit you to actually send this to my mail, right, or to my Telegram if I'm actually too kind to actually attend to that. Now the assignment at this particular mail. Uh, but you have to inform me before you actually send that. If I'm going to accept that or not, I'm not sure yet. Or you can send it to my Telegram. So as my Telegram channel, you can actually send that for you to look at that. Now let's quickly go to the chart and actually see those patterns. We're actually going to, I don't have any pattern and we just look at how they played out and what are the things we're actually looking out for in there. All right. So let's quickly go onto the chart and see. All right. I hope you guys are following. Okay. Just like what I said, I have all recordings on liquidity zones and trap zones, so you can actually see them. They are my chart, my channel, then on market structure and that, right, on market structure. Right. Let's look at this. Probably trade for this week. Let's just look out for trade for this week. Then we see how this thing actually played out. Now, the first thing we're going to look out for, just like the pattern. Let me try to draw the pattern again. We just make a reference to it. Let me try to draw the pattern here. Just make reference to them. Then the pattern. Right. right? Something like this. Take out liquidity, right? So we have our source and breaker. Let's try to mark our source and breaker because you have to mark your source and your breaker. This is actually going to be your breaker, right? Then this will be your source, right? This will be your source. So you are expecting markets to come back to the test. Sorry. You're looking for market to come back to the test this area and drop, or market to retest this area and drop, right? So we have another one that is like this. That's for the buy section, right? Right. So we have the source here, which I already took out the candle, the IP zone. Then we have the breaker. Then market can retest this. Pardon me for that. Market testing either the breaker. Right. So this you can actually look for this on any time frame, then any time frame from monthly to 1 hour, 1 minute time frame. Then you look for your entry and actually take the trade. All right. So just the second pattern is something like this. So that's actually what you are looking for. This is actually the pattern. Then you can as well study them in this manner. All right. Let's see. I just give you a few examples. Then you can now. Okay, I think I'm actually going to discuss. I actually see some kind of setup for next week here. I'm going to discuss that with my group. Um, look at this. Look at this. This is like a swing low. Can you see this? Actually, like a swing low. Can you see this? You took out this liquidity. Then after taking out this liquidity, the market actually came back here to this particular area to break this market structure, right? Because this is actually like a lower high, right? This is actually like a lower high. The market taking out this low. After taking out this low, this actually can be called a lower low. But you can see this is actually not a far one because would have actually had people that would have actually been buying this market, right? And people are expecting this market to still go down because the trend of this market is saying that what bearish. If you actually check from daily, from weekly, from monthly, it's showing bearish move. Now, a lot of people would have put their buy stop in this particular, sell stop in this particular area, right? Then people that are already buying from last week Friday, they would have actually put their stop loss in this area. Look at how market actually came back. Then actually buy the market from them, right? The market buy the market from them. Then you can see since then, what you don't want to be a buyer. Actually, one of my method is actually we actually predict if this will actually happen. We actually know how we can actually do this, something like this. So you'll be able to, if you check my recent uh, uh, um, flashcard I sent to my page, you will see ELPC. That's actually expecting LPC. So we can actually anticipate that. And there are actually some signs you will actually see. There are some features and there's some rules actually guiding that before we can actually easily predict that. If you see my setup on silver, rather on DXY, they actually used to predict all gold I mean, all USD pairs and some other pairs actually attached to them or related to them is actually that particular ALPC that we used to trade this week. Right. So I'm not going to discuss that here. It's not within the confines of this training. Right. So took out this liquidity. So we would have actually be a buyer here around this area when the market actually giving us a sign that particular rules being met here. Then market came back all the way from this area and actually to break this market structure. Then you can see it came back. This is actually like a source pattern. Like this is actually the source. Can you see this source? This particular candle. This particular candle. Market came back and actually retested. Can you see how market actually retested it? So this is actually where you'll be looking for your entry, right? Then look at how many profit you would have actually made from there. About uh, 350 pips. You know, your entry, I'm still going to discuss entry. Let's just look for patterns all around, then we can actually follow that as we want to. Can you see that? That's actually the first pattern you can actually look out for. So rule number one, took out liquidity. Rule number two, you can spot your IP. These are actually the rules that are guiding them. Let me share the screen again for you to see the rules. You can check my channel, then you actually see this rule. I already wrote them down, right? Rule number one, we can actually spot IP taking out liquidity, right? This is actually your IP taking out liquidity. Rule number two, we actually going to spot the IP, right? This is actually the IP. That's your rule number two. Then rule number three, just neglect this UID pattern is not for you. With significant move, you must actually have a significant move away from that. That shows when the liquidity is taken, you are not expecting to actually take a trade immediately. You must actually wait for you to see a significant move. And that significant move must make sure or must actually break market structure. That's rule number three, right? Then rule number four is price actually trade back into the IP zone or into the breaker, right? Then rule number five, your target is the next liquidity zones. So if you don't understand liquidity zone, go and check my webinars on liquidity zone, so you'll be able to see how your target is actually the next liquidity zones. Actually, there are some other features, actually the basic things in LPC. It is actually not the real thing, right? But with this alone, you can see what I just discussed with you now is actually what we see that's actually appearing here. So if you understand that alone, that can actually give you that money that you're actually looking for, right? So you can see that rules. Then look at this also, right? Look at this. This actually took out this I, took out liquidity. Then market actually gave us our IP, right? Then give a significant drop, breaking market structure. After breaking market structure, we can see that price actually trade back into the IP zone. The market drop. Can you see that? Market drop. So your target, all those five rules were met, right? All those five rules were met. So we can actually spot another one. So this is like the second pattern. Can you see the second pattern being formed here? Let me show you that. Like this for the buy, oh, I did not really draw that very well. Something like this. I did not draw this, so this is actually very wrong. Still drawing the same thing. Something like this. Break market structure, market coming back to the source. Right, something like this. Or can you see that um in this place? Right, let me draw that zone for you. This is a low, this is a high, this is another low. Can you see that the market come back, break market structure? Then what happened? Market came back to retest this area. Can you see this is actually what time frame now? This M30 time frame. Can you see your stop loss is below this area? Then your entry is actually on this candle. Your entry is on this candle. Then where are you targeting? The next liquidity zones, which is actually this high. Can you see that? That's actually where you are targeting. Can you see that? So for you to trade this particular pattern I'm showing you effectively, you must learn the market structure and link everything together. I'm not going to do that for you. You should learn that all by yourself. That's the reason why you need mentorship. Right. So let's see the chart. Now look at let's look at daily. Let me just look at um, some particular. Let me see GBP USD. I think is a pattern there. Now, for look at GBP USD. Can you see that pattern in place? Took out liquidity. We can actually see liquidity zone, which is actually like an equal high. The market came all the way here. Take out that. equal high. Then we have break market structure, which is significant drop. Can you see this significant drop? With a significant drop. Then after that, you can actually spot your IP, which is actually your source. Then you can actually spot your breaker, right? First of all, market actually came back to the breaker, right? Can you see this particular zone? Market came back to this zone, retested this zone, then drop. But market came back again to the source. But with this, you would have actually made profit with this. Look at this. Look at how many profit you would have actually made with this. This is about 325 pips. But you can see that the market structure was actually bearish. So market came all the way to this particular IP zone, retested it. Can you see that? Retested that, then actually dropped for about 1,700 pips. Can you see that? Right. So that's actually another pattern. You can look for that pattern anywhere and everywhere. Now look at this area. Look at this. Can you see? It took out this liquidity, took out this I. After taking out that I, then market came back, break market structure. Right. The market came back to retest this particular candle, then drop. Can you see that? Look at another one here. This is actually like a swing low. Market came all the way here, took out liquidity. After taking out liquidity, come back to break market structure. The market came back to retest this. So it actually did not come back to the source, but we actually around that area come back and actually went back again. Can you see? So that's actually what you're looking out for. Look at this one also. Took out this particular equal high. After taking out that break market structure, market came back to actually retest it, then market drop. Can you see that? So these are the things you will actually look out for, and it's actually going to help you if you can. Let me just go to lower time frame, probably H1. Let's see if we can actually find that on lower time frame. Let me just show you some samples of that on lower time frame. Right. Look at this. Look at this particular low. This is actually like a swing low. Market came all the way here, took out this low. After market taking out this low, then break market structure, break all this high. Can you see that the market came back to retest this IP zone? Then look at boom, it went up. Can you see that? Very, very important. So let's look for another example. Let's look out for another example. Right. Does it take out this eye? Okay, it doesn't take out this eye. Now look at this one. Okay, this is actually like a shift in market structure. Right. Look at this. This is actually an higher low, a lower high. Then market created a lower low. Right. Market created a lower low in this particular area. But market failed to retest the breaker, but retested this other block and drop. So you can find that particular trade anywhere and everywhere. Let's just see recent things that this pair also did. USDCHF. So this is actually an opportunity for you. This is actually a higher high, this higher low, this is a lower high, right? This is a lower low. Look at the market came all the way to retest this breaker. Then look at how it dropped. Can you see that? So that's actually a way to test that and to actually trade. So when you understand this thing, you can just study my flashcard alongside with this. Then also what I actually discuss with you on how to read my flashcard. All those is actually what you can actually see. So your entry will be probably, if you determine this on a higher time frame, you can switch to any lower time frame of your choice to look for your entry when the price actually retesting that trade. So your entry will be when you see that same pattern again appearing, right? So for you to be able to do that. Right, I hope I've actually communicated to you. So very simple thing, very simple strategy that you can actually practice. This is how I trade, but not a comprehensive way actually. But with this alone that I've actually shared with you, and with studying my flashcard, I believe that you should be able to raise sufficient money. As for people that are actually complaining you don't have money, you should be able to raise sufficient money to pay for the class and come and enjoy what the mentorship is actually all about. But with this, you can actually see the beauty around this. This is actually what we call liquidity trading, liquidity providers, because we're actually looking for the zone whereby the liquidities would have actually be taken before you trade. Right. You want liquidities to be taken, you want retail traders to be out before you actually take your own positions. So this is actually what we call liquidity providers trading. Then you will as well look for your entry, right? Your entry. Let me just show you quickly show you that example, if if possible. Now, you would have actually marked your, let's say, this is actually the breaker. This is actually the zone of your breaker. So whatsoever things you're actually looking out for here, you are going to switch to lower time frame to look for your LSB in there, then for you to take the trade down. Do you understand that? I think that's actually how far I can go. I should not be teaching you entry. You should be able to look for that by yourself. But the basic thing is actually the setup. So you can make the setup and actually look for the entries. Then we have another entry that if you don't actually understand the entry very well, you can just put your limit order. Probably this is actually the source. If this is the source, right? You can put your limit order at the wick of this candle, then you put your stop loss above this high. Then your target will be either this place, this area, this area, or this area. These are the next liquidity zones that you can actually see. Or for the breaker trade, you can just put your entry at the breaker. Then you put your stop loss probably above the 50% of that particular area. Right, above the 50% of that particular area, then you can actually target this. But this will actually give you a very, very wide stop loss, a very wide stop loss. So you will not be able to use that kind of stop loss I use 2 pips, 3 pips, 1 pip stop loss, 5 pips, 10 pips, all those things actually as a result of you now dropping to lower time frame to look for the the same pattern, the IP zones, and some other things in the conjunction for you to bring out the lower time frame buyers and for you to enter with a very tight stop loss and a very big reward. All right. You can actually take a trade with just 3 pip stop loss. Then your target is actually like 200 pips or 300 pips. That's about 1 to whatsoever risk reward ratio. All right. So that's actually how to gain a very big risk reward ratio. But the most important thing is actually for you to understand that then when you link this alongside with market structure, things, the most important thing is actually for you to look for the pattern alongside with the market structure direction. This will actually help you a lot. So I've actually give you the gist. Just trade that pattern alongside with the market structure. Just check the market structure on higher time frame. Then you can look for your setup on lower time frame. Learn how to link everything together, and that can actually give you a whole lot of things. Study this alone, and this is actually like a banger to you. I can actually uh, assure you that when you practice this and actually trade this, it's actually going to be one of the things that will make you rich, because you are not just trading, you are trading when other people's stop loss has been hit. So most times it is impossible for your stop loss to be taken out. This is actually when you are trading in line with the liquidity providers. You will win some, you will lose some, because it's not 100%. But this method is actually very close to 100%, or it's not 100%, because you are trading when all the stop loss has been taken out. Right. That's the information I would like to share. So if you have questions, you can let me know so that you can take that. Then you can as well apply for the mentorship, right? Because in the mentorship, I will give you all trainings that you actually need, all the linking, all the information, how to bring all the informations together, all those things will actually be provided, right? And you will also be guided, and you'll be mentored until the time you are profitable, right? Until you're actually profitable, I will actually most of you actually that you are in the free class, you will know that I even answer your chat or your question any time of the day, as long as I'm actually still awake. I will answer you, right? I'm not a kind of person that just talk chat. I can't even do that. I can't. I by Telegram, I have hundreds of people messaging me every day. But if you check how many messages I'm actually having now, about 47, right? About 47. I'm not the kind of person that we have thousand, 10,000s of chats. I don't know how people actually do that. I will surely answer my chat. So you can send your chats to me, then I will be able to reply to that if I actually want to. And if I don't want to, I will refer you to the channel to go and study it. Right. Thank you very much. So you can ask your question now. All right. So if you have a question, you can just let me know and let me. Um, and another thing that you guys can actually appreciate what I'm doing is, as you can know, as you will know, if you are actually very truthful. I know we have some people, they are just there to oppose what I'm doing. I don't actually mind anything. Now, if you actually do, love what I'm doing, you can as well refer people, add people to the groups, let people come to join, right? They should join the Telegram channel and at the same time follow my YouTube channel, like it, subscribe, share the video to your friends. And why are you doing this? Now, the reason why you're doing this is because the more people actually see the content, you actually get to a time that that particular content will actually give me, right, some source of income, right? That's another. So I would not actually say, oh, it's nothing, right? You should, as well as a businessman, learn to earn from different means, right? That's one of the reasons why I actually want to be active on that YouTube. You guys are getting my materials for free. Now go and watch it. Let YouTube pay me for that, right? Then also when you refer people to the channel, it's possible they will apply for the mentorship, and I will get income from that also, right? Not that I'm not making my profit. I've heard people saying that, oh, if they are making money, they will not be doing mentorship. That's actually a lie. How do you want, if your professors are making money, why are they teaching you at the universities? So that's actually a very absurd sort of thinking. Everybody wants different sources of income. And if you own an institute where you teach, it's actually not a sin. All right. So I'm doing my work, not that I'm not doing my work, or you guys are just paying me for free. No. You're paying me for working for you. So that's actually another means that you can as well compensate what I am doing for you. Right. So if you have a question, you can just let me know and we'll close this section. I have said it, I'm not using Quasimodo. I'm not using any I said Quasimodo. Please mind you, don't say what I don't say. I said what I just drew looked like as Quasimodo. I said I'm not trading that. I don't know why people react like that. All right. Can you explain what happened Thursday, Friday, and Monday on this chart? What happened as well? Which pair? Are you using okay? Your answer 7 p.m. time. Yeah, this particular recordings you see that on my YouTube channel. Which particular chart which pair are you talking about? What happened on Monday? This pair USDCHF. What happened on Monday? And what's your question again? On Thursday and Friday. What happened on Monday? What this is actually Monday. This is Monday. Where? This is Monday. What happened on Monday? We actually have a setup here. What I called LPC actually happened in this particular area, right? So this is actually where I took my trade from. Then on Tuesday we have shift in market structure, actually giving us another pattern. For my group, this will actually be a kind of re-entry for you, right? If you're actually in the mentorship, this is actually kind of a re-entry, then or a shift market structure for some other people, whereby you can actually as well enter here. So this is actually Tuesday. This was Wednesday, Thursday. Right, okay. This Thursday, this Friday. On Thursday, there is no kind of entry here because the market just drops straight away. But on lower time frame, it surely give you a pattern, probably M15 or M5. It surely give you a pattern to sell. Then this is actually Friday, which actually gave a pattern to sell to on Friday. You check M5 for this pair, already give you another pattern. But on H1, it doesn't give a pattern to sell. All right. So this particular one, actually, you can see that it gave, okay, this actually gave like ELPC, that's anticipating LPC setup. This actually gave it in this particular area. Then this would have actually been the LPC setup if this price actually come back to retest this area, but it actually did not come back to retest it. But it actually broke this section. Can you see it broke this particular level? Then the market came back to retest this place at the 1 minute time frame. So at the 1 minute time frame, you can as well, the setup does not appear on 1 hour. So that's actually the beauty about this thing. If you actually understand it very well, you might not be able to get whatever it is we're going to do. But I actually explained this in a mentorship. You'll be able to get an entry there, even though your setup. So as long as that particular pattern, right, that particular structure of market or order flow is actually saying bearish. So you can as well look for entry pattern here. As you can see, look at this is actually 1 minute time frame at this breaker. You will see how market actually gave you a high, a low, a lower high, then actually break it. The market actually come back to retest this particular area. Then you can see the drop. That's actually on 1 hour time frame. So you can see if we actually enter the market in this particular area, your stop loss is there. Let's say your stop loss is about 10 pips, right? 10 pips. So with that, this is about some, let me check. This is your entry in here. With 10 pips stop loss, you can actually take about, this is actually about 1 to 8 risk reward ratio, as you can see, just on this pair alone. Just on this pair alone. Right, but I'm not going to make any flashcard today. I've already made flashcard yesterday. Just doing some stuff that's actually taking my time for not making flashcard. But yeah, I will see if I can actually make flashcard for today's trade, if possible. So this is actually something to think about. You can see on 1 hour time frame, on 1 hour, you don't really have a setup because there's no retest of that. But as well, look at where I actually shaded. Can you see where this actually happened? This is actually where you would have actually taken your trade from, even when this is actually yet to happen on 1 hour time frame. So that's actually the flexibility that you can actually see in this. You can go as high as monthly and as low as 1 minute time frame. All right. You will know if the market will change market structure when there is a break in the market structure. You can see that in the last webinar on market structure and the social flow. Go and study that, how the market actually change direction. And this is actually what I saw in this pair for me to actually take this pair. This is actually what I saw in here. The market was bearish. Can you see the market was bearish? Then it actually gave us an ELPC. So it actually gave me more particular ELPC means anticipating LPC will actually take place, anticipating LPC will take place. So that's how you give me an assurance to trade this pair. And this is the same thing that DSY with dollar index actually gave, and more of the reason why bearish on dollar for this week. Actually bearish on dollar. So I will actually be waiting for what the market will do when the market open on Monday, and for me to know the direction that the market will actually follow. All right, thank you very much. If there is no question, you can just expect the recordings. All right, later on. Take notes, then study what I've just discussed with you, practice that, then I can assure you that you will be extremely profitable with this. This is one of the way I trade the market. This is actually one of the things I look at, the basic things I actually look at. And you can see I've actually showed you the trade I took. For you can actually go through my flashcard, then you will see that this is exactly what you will find there. All right. If there's no more question, and thank you. Just like what I said, share the channel's link, share the YouTube link, let people also see those videos. You can share it on ICT channel. You know, if you actually share the YouTube link on any channel, they would not actually, you will not be removed, because actually you are not sharing a channel, a Telegram channel, so people can actually get to watch study the recordings, and the Telegram channel is already there on the description, so they can as well join when they actually learn one or two things from that. All right, so I think I have some other question. What's the YouTube link? You can just check my Telegram channel. You will see the YouTube link there. Right, YouTube link is on my Telegram channel, so you can study this, study this, study this, study this, study. Vivenk, please message me immediately after this. I don't know what you are really doing. Just message me immediately after this webinar, please. That's Vivenk. Message me immediately after this webinar. Right. You can get YouTube link on my channel. Right. Get it on my Telegram channel. It's there. Get it there with the videos. You will see it there. Right. Thank you. I will see you in the next webinar.